Infosys promoters, including Narayana Murthy as well as Chairman Nandan Nilekani, will not offer their shares in the buyback process announced in September. Now, the IT major stated this in a regulatory filing on Wednesday. India's second largest IT services company announced its plan to buy back 18,000 crore rupees worth of shares, its largest in a decade, at a time when stocks of those firms have been under pressure due to a weak macroeconomic environment as well as rising uncertainties from tariffs. Now, the promoters and promoter group, which also include their family members, hold as much as 13.505% of 542 million outstanding shares of the company as of the date of the announcement and the end of the second quarter of 30th September. Now, Narayana Murthy holds as much as 0.36 and Nandan Nilekani as much as 0.98% of shares respectively, while Sudha Gopalakrishnan, wife of co-founder Chris Gopalakrishnan, is the single largest promoter shareholder with 2.3% of Infosys stock. Now, the Bengaluru-based company will buy back 100 million shares at an average price of 1,800 rupees per share. Now, that represents 2.41% of the total number of equity shares in the existing total paid-up equity share capital of the company, the country's second largest IT services provider. And Kranthi Bathini joins us this morning with his view not just on the markets but also this interesting development at Infosys. Kranthi, good morning. Pleasure having you back here with us on News9. As we speak, Infosys stocks are up about 3.1%. Explain to us, what is this acceptance ratio and what are investors picking up of the fact that the promoters and the promoter families are staying out of the buyback?
One thing, Kartik, good morning to you. Yeah. The promoters opting to stay away from the buyback, not participating in the buyback, it reinforces their confidence for the company's prospects in the near term. Definitely, it's sending a indirect positive signal to the investors for the promoter group, which is a minority group, despite of the promoter group, okay, what they control in terms of their complete shareholding pattern of Infosys Technologies is concerned. There comes in terms of the percentage, they are a minority group, but definitely in terms of the value, they hold substantial control in terms of the company prospects are concerned. So definitely it gives a kind of a positive signal for the investors, and the acceptance ratio is it is on a pro rata basis with respect to how many shareholders are going to opt for participating in the buyback.
Okay.
But the direct the theme of this entire episode and the reason for this positive uptick in Infosys shares today is that promoters are not participating in the buyback. Okay, they want to hold and reinforcing the confidence on the prospects of the company.
All right. And it seems that the buyback price of about 1,800 rupees versus today, despite a 3% hike, the price of Infosys around 1,560 odd levels. So what do you make of this premium when it comes to buyback? Is that a just sort of premium to go with?
Yeah, and also some investors, because 1,800 rupees is there for buyback, and some investors try to take that 300 rupees buyback price. They can buy in the open market and can tender in the buyback offer. That kind of activity also do happens in these kind of companies.
Okay.
So that, and also the news has came that promoters are reinforcing their faith and trust, staying and keeping their shareholding, not participating in the buyback. That sends some kind of a positive signal. And also we can see at this point of time the yesterday news that has poured in the market, which has made the market to stay above 26,000 level, which is a positivity that India can have a trade deal soon
with the US,
with a favored percentage of tariff.
Yeah.
So that is also helping the market to stay, and Infosys has taken the lead for this.
Right. And the repercussions seem to be pretty squarely distributed across the entire IT pack. So it's not just Infosys. You also have HCLTech, which is up more than 2.5% in early trade. You've got Wipro and TCS comfortably above 1%, and Tech Mahindra inching closer to the 2% higher mark in trade this morning. So how much of this do you feel has to do with the stand taken by the Infosys family and the founding family, as well as the family members of the founding families? And how much of it has to do with the fact that perhaps India, US, India, EU, FTA, is pretty much in works towards completion now?
Yeah, Kartik, this we can perceive as the trade deal that's going to happen between India and US. Okay, that's sending a positive vibes for IT companies, because IT companies have been impacted because of the trade negotiations and India and the US relationship, how it have taken a beating in the recent past. Okay, that has been weighing on IT companies by and large at a higher extent. Now, since the positive news and the feelers are coming at this point of time, so that's giving some kind of a positive cushion for the IT companies. Right now, we need to see the final draft, and we need to wait for the official statement from the administrations and policymakers, okay, with respect to the trade deal.
Yeah.
That's essential, because the narrative keeps changes overnight. That's extremely crucial for the investors.
Absolutely. And I think now the question really is, with reportedly Prime Minister Narendra Modi skipping the ASEAN summit, one can pretty much assure that there is no announcement of the trade deal coming this month at least. And then too close to Bihar elections, if there are any concessions that India is making on dairy and agri, it's unlikely that the government will make those announcements, at least until the last vote has been cast in Bihar. But shifting focus for now to another sector, Kranthi, and it'll be great to have your input on that as well, is the energy sector. Now, the fact that there are sanctions now, official sanctions that US has pushed on Russian oil makers, oil refiners, and oil prices globally have inched up about 3% or so. What do you make of the energy stocks? Because I'm looking at Reliance, which is up about 1%, ONGC is up about 1%. So how do you think the energy story pans out from here?
It's very tricky, Karthik. The announcement that has came from US administration, okay, we are restraining India to buy more oil from Russia. But we have not witnessed any categorically statement from Indian administration denying that we are stopping buying oil. But there might be a situation, the quantum of oil bought by Indian oil marketing companies can be slightly reduced, but we don't have a quantum or figures, exact figures of how much the Indian OMCs have reduced the oil buying from Russia. But for India, it have the legitimate right to source the oil wherever it gets a good deal, because of the growth and also the prospects of growing needs of India is concerned, the energy needs of India is concerned. That is extremely crucial.
Right.
India have the legitimate right to buy oil, and we are not a small country. We command. We are one of the largest consumer of energy and oil across the globe. So at this point of time, we have the legitimate right. That's what my personal feeling is.
All right.
But we need to have a bilateral statements.
Absolutely.
The statements have been coming from one side only.
One-sided.
So,
Absolutely right.
yeah.
So, Kranthi, one sort of fallout one could assume, in fact, the fear always is that as oil prices go up, there is also possibility of importing inflation. Now, of course, oil prices are hovering in the $60 a barrel region right now. But if these sanctions, and when they take effect, and in case oil prices were to get disrupted towards the upward territory, then there is a possibility of India importing inflation. But despite that fear, I'm seeing that the consumer non-durables, the FMCG space, is holding up pretty well this morning. You've got HUL up about 1.5%. You've also got ITC, Tata Consumer, these stocks doing very well. Now, is this inflation something that one need not worry about until oil, let's say, touches a $70 a barrel mark?
Absolutely, Karthik. Okay, oil is in a consolidation phase, and whenever in the recent past, whenever the geopolitical escalation has arisen, we are pretty much confident the oil are going to be in a consolidation zone. And also we need to take into cognizance when oil prices rises, that's just like a double-edged sword for the U.S. administration
You're
also.
okay on segment
Uh,
3
uh,
duration?
yeah, it is the oil prices are double-edged sword for U.S. administration also, U.S. economy also. They want a rate cut, and the inflation is the key concern for the Federal Reserve. And at the same point of time, U.S. is one of the key exporter of oil at this point of time, gas at this point of time. By and large, what we can sense at this point of time is oil is going to be in a consolidation phase, prolonged. We need to wait and watch. There can be here and there some kind of spurts because of these geopolitical statements do escalate somewhere here and there. So we can expect some plus or minus 3 to 5% spikes or reduction in oil prices. Coming to the FMCG pack is concerned,
Yeah.
the GST booster has been the kickstarter for
Right.
FMCG companies. And
Right.
these stocks have been in a long consolidation phase in the recent past. And we can see some kind of a feelers with respect to boost up of consumption in the medium to short term. That is the reason for this positivity in FMCG companies and stocks are concerned.
All right. And final question to you. I don't know if you can venture a guess or a guesstimate, Kranthi. Now that we've seen this sort of momentum coming back into the Indian markets and the spate of bad news seemingly over and things only likely to get better, looking at the momentum last 5 or 6 trading sessions and the levels that Sensex and Nifty have breached today, the 85,000 mark and the 26,000 mark, where do you think markets are headed? Are they headed in the positive territory, or are there more shocks that one should sort of be ready for?
Kartik, very interesting question. But last few days, what we witnessed is the FIs have reduced their selling, okay,
Right.
which has given a positive momentum and sustainability to come back to the range of 26,000. Despite of FIs selling earlier, we could be able to hold on to 25,000 level. From here onwards, if we can get a trade deal which is in favor of India, definitely the market can sustain the range of 26,000 level. But right now, the support zone has moved from earlier 24,500 to the markets 25,000 level. So
Okay.
this 1,000 points rally in the market and sustaining the current range of 25,000 in the medium to short term is extremely crucial for the markets to take one more leg up rally further. We are already just at the range of kissing distance to the new highs. So we are having an earnings season right now. If we can get some kind of a strong support from the earnings season,
Yep.
definitely market can be headed to a new high. Two things one need to take into cognizance:
Yeah.
the result season and the trade deal. If we can get a favorable news, definitely market can head to the new high. Or else the market can be in a range, but the change of range is right now changed to the range of 25,000 level.
All right. Well, Kranthi Bathini, let's hope that both these spring up positive surprises, the earnings season as well as the trade deal with the US, at least for the sake of retail investors watching the show. But as always, pleasure having you. Thank you so much for your time,
Thank
Kranthi
you,
Bathini.
Kartik.